This is Alan Farley from FX Empire. Dow component Microsoft Corp reports earnings after the close on Tuesday. Looking back, the stock has been a top performer for many years and has one of the highest ratings on Wall Street. The rally topped out right around 191 in February 2020. The stock sold off about 60 points and then recovered into May, built this handle in a cup and handle pattern and broke out in June, entering a very nice trend advance that got up about to the 235 level in September. Now that was a top for the year for many tech stocks, and Microsoft was no exception. It sort of struggled with this triangle pattern all the way into 2020, finally breaking out of this little triangle pattern, coming up to this rising highs trend line, coming back and testing new support, settling on the 50-day moving average and taking off in another rally in April. This April rally is very unusual because if you take a look at, say, the five FANG stocks, they're not trading at new highs. Well, one is, I think, is Alphabet's trading at a new high. So it's still the majority of tech stocks are having trouble with this 2020 resistance level. Facebook comes to mind as an example. So it's trading very, very well heading into earnings. It's just about a point from its all-time high, which was posted last week, and very easily take off in another rally. Looking down at on-balance volume, you can see we have minor bearish divergence here with this high lower than this high, even though we're trading at a new high. Now, this hasn't been a problem for Microsoft in the past. In fact, it's trading much lower. OBV is much lower now than it was in 2008, 2009. And that's probably because of huge stock buybacks that have lowered the number of outstanding shares. So I think you really have to not worry about this divergence and just follow the price action and follow the report. I think its biggest obstacle heading on to Tuesday night will be Azure cloud computing sales, which have come in at like 47, 48, and 50% in the last 3 quarters. With those numbers so closely tied together, we could easily get an outlier down in the low 40s or upper 30s, and I think that would cause a little bit of a shock among investors, perhaps coming down and filling this gap, which is also at the support line right near 250.